Welcome to Scrolling with Ceazor. Today is February 2nd, 2026, and we had a pretty juicy weekend. It was kind of a bit scary, actually, if you think about it. So I'm going to open up a couple charts here and take a quick look at them. So WST ETH, my position, it went all the way down through my buy low position. I'm hoping that, ETH recovers and we don't continue to drop. So yeah, it took a little risk. Of course, there's a little bit of risk. I'm a little bit, shooken in my confidence, especially since I know I've gone through some of these heavy bear market dumps that just keep going down and down and down. But there is a pretty nice recovery today, so that's hopeful. Even the gold chart here, it went all the way down to the bottom of my range, but back inside. It's trading inside. I have a concentrated liquidity position of gold, and I'm actually, this says USDT, but I'm actually using SUSDS. So I'm using an interest-bearing stable coin. So the prices are a little bit wrong compared to my position. But anyways, I am happy that it's bouncing around in there. I don't think, it's, I see it kind of bounced off support. I'm hoping that it'll stay inside. Even if it crabs in there, I'll be more than happy. But anyways, let's move on to the news today. There's quite a bit of news, obviously, and let's get into it. So this first one here, Alchemix is one of my most favorite projects in DeFi. It's fantastic. I've got lots of videos on Alchemix. You can check it out. V3 is right around the corner. You can check out my video on how V3 changes from V2, and you'll get a pretty good understanding then. But basically, they're just saying, it's right around the corner. So figure it out. If you're using Alchemix already, you really should figure out what's going on, because there are some major changes, and you should understand those changes, especially if you're currently holding positions in Alchemix. Okay, moving on. Here I have an article by Approve. He's one of the people who work with Rise Chain and so forth. But here he's talking about a protocol that is called Spine, that's developing and deployed on testnet, Rise testnet right now, and they're testing away. So you can go and check it out on their testnet. But basically, it's talking about loans, and the problem with loans is that, there's not enough fixed rate loans out there. There's not enough systems where we have fixed rate loans, and big money likes fixed rate loans because then they don't need to monitor it, right? Like variable loan rates, like what we see in DeFi with the, there should be a chart here somewhere with the hockey stick. This guy here, the hockey stick. This kind of interest rate loan is great for encouraging people to take action, right? So when the interest rate does cross this line, it starts climbing quite drastically, and then people will come and repay their debt, right? However, if people pull their lending liquidity, then it also pushes it into this range. And then if you are a borrower, you need to monitor this, otherwise you'll be unprofitable, right? So there's a lot in here about fixed rate, but the best thing here is kind of, let's look at this picture here. You can read through the whole article, of course, but this kind of explains what Spine is trying to do. Okay, so if you lend on Spine, so Spine will first lend out some of the money to fixed rate borrowing. So people can come to Spine and use fixed rate borrowing to borrow assets, but the additional assets that's excess will be lent on Morpho in these kind of, variable interest rate models, right? So your assets won't be sitting here idle if they're not fixed rate borrowed, but when they are fixed rate borrowed, like term deposits, basic term borrows, then they will, it'll go into Morpho if it's not there. Okay, so let's moving on. Here we have a long explanation. Sometimes I find Vitalik's I've read this two times, and it's a little bit unclear, but I kind of get what he's saying. And if you go here to, I clicked it, Gabriel Haynes does a quick little explanation, his take on the original post by Vitalik on how to create creator coins, how to fix the creator coin economy. And here he is kind of explaining it deeper based on Millie's idea of Millie's kind of thoughts on it. So Millie in this post, he replies to someone saying that yesterday Vitalik posted this here, this how to do creator coins, and then here he is giving more explanation to it. And basically he's just saying, like, first of all, we have to use like prediction markets, because then there's money. So if you make bad decisions, then you lose money. So you're not going to support some scammer or someone who produces low quality content because you will lose money. And that's kind of the key thing. Like what motivates most people, especially in the crypto industry, is what will make me or lose me money, right? So there is that idea. But there's this other part here where, it says one layer is a decentralized and pluralistic and maximizes this space for intrinsic motivation. This cannot be token based because token owners are not pluralistic, and anyone can buy in and get 51% of them. Votes here should be anonymous, ideally MACD'd, and to reduce risk of collusion. Okay, so what is he talking about here? I think he's talking here about like he has this idea where you can like have a creator DAO basically, where the people inside the DAO can vote people into the DAO and kick people out of the DAO. So so in order to, I don't know how to explain it exactly, but so let's say we have 100 creators and they're all producing good content except this one's producing bad content, then these guys can kind of vote him out, right? But we don't want this to be a monetary thing, because then just one rich person can control it, right? But if it's kind of more like a reputation-based thing, and everybody who's part of this DAO is making money because they know that everyone in the DAO is producing quality content, then they will ensure that the quality of the content inside this DAO is above par, right? Or is pristine, right? So I think that's kind of the idea here. And, the fact that they should be anonymous so that they can't like, hey, buddy, you voted me out, you're my friend, but you kicked me out. So it becomes more of a critique of actual content quality as opposed to personal relationships and stuff like that. Okay, so I think that's kind of enough for that. Let's move on. Here we have Mark Arjun. He did a nice long thread on a yield basis, but basically the thing he's saying here, it kind of stuck to me and kind of made me think a little bit deeper. Okay, so he's saying equities are going on chain, so stocks, right? Stocks are going on chain, but on chain equity yield is still mostly a mirage. Traditional securities lending is huge, but retail really captures it, and yield is typically very low. So yes, like you can borrow. If you like, Elon Musk borrows versus his Tesla stock, right? And I'm sure he's paying interest on that. So people are, paying, they're lending him their money for his Tesla stock, right? And he will return it. However, I don't know how his repayment schedule is or his plan for that. But one of the things that we do see is like a lot of companies, TradFi companies, are talking about putting stocks on chain, and there are already stocks on chain. Now, the only real way to get stocks yield right now is to provide them to liquidity pools. No one's going to borrow your Tesla stock, because the only reason why they would borrow it is to sell it and short it, right? So there might be a little bit of like that going on, but not really, right? So the only real way to provide to get APY on your stocks, there's two ways. Okay, so the first way is to like borrow assets and then yield farm with those, right? Lend like borrow stable coins and lend them, right, somewhere, right, or LP them or do something with them in DeFi to make you some more US dollars. So that's one way. But the other way is to provide liquidity to liquidity pools. However, when you provide liquidity to the liquidity pools, you're a trader. So you're selling some of your coins or some of your stocks, or you're exiting and entering these positions, right? And then you're also getting some impermanent loss considerations. Now, however, with yield basis, they've kind of solved the impermanent loss problem. And if you don't know how it works, then you can watch my video. I have a video on yield basis that explains how it works. But basically, if stocks are allowed to join yield basis, then they're able to provide liquidity, get trading fees without incurring this impermanent loss because of the way the system works. Okay. That's it. You can read through his whole thread here and kind of get a little bit more information on what I'm talking about, or you can watch my video on yield basis and get a deeper understanding on how that system works and think about it for yourself. Okay, so here's Rameses. Rameses, it says, multi-chain does not affect the Hyper EVM deployment with almost 2 million in volume over the last 24 hours and only 270K in TVL. Our Hype USDC pool is one of the best earning LPs on Hyper EVM of any two assets. So yeah, it is pretty good. I currently am providing liquidity to this pool. So this is significant to me, and I have biased information here and so forth. So check it out. If you are a Hype holder, and Hype did some pretty wonderful stuff this weekend. It pumped quite a bit. Let's do a quick little check. Dex screener, and let's go to Hype USDC on Hyperliquid. Yeah, it's at $32. So everything else kind of dumped like crazy, but the chart's not even opening. Anyhow, so there we go. So yeah, it's recovered a decent amount, whereas most other assets are sitting down near the bottom or hanging out at the bottom of a cliff. But Hype has kind of recovered a little bit. Obviously, it's not all the way back to its $50 to $60 all-time highs, but it looks pretty nice. So anyways, there is that. You can consider using Ramesses or Ramses as a place to provide liquidity if that's something you like doing, providing to concentrated liquidity. Okay, moving on. Here we have Liquidity, again, the Bold stablecoin. So it says, I'm just going to read it, and then you think about it yourself, okay? Bold is your DeFi savings account. Earners get 75% of the borrowing fees from Bold at all times. So when you provide, Bold into these stability pools, you're getting paid in more Bold, which is a stablecoin, right? Now, liquidated ETH and LSTs at a discount. So when the ETH dumped this weekend, there were people who got liquidated, and those liquidated assets are given to the people who are in these stability pools, who are basically lending the Bold back to the system, the DeFi saving account, okay? And upside from fork airdrops. So you get some airdrops as well. So it's pretty, and it's immutable and, unstoppable, completely decentralized. Check it out, man, guys. I'm going to keep chilling it because I love it so much. And, I am biased as crazy, and, but still, I'm not biased simply because these guys gave me some money. I'm biased because I really like this project, and I think everyone should consider it with some portion of their holdings, okay? Especially if they're DeFi aficionados. Okay, moving on. Here we have a tweet I did yesterday, and I want to kind of clarify this a little bit, okay? So I went to Railgun yesterday, and I've got some staked Rail tokens, and I went there to just kind of manage my position, check it out, and I heard somewhere that there's some upgrades to the Railgun protocol. Sometime last week, someone replied to me and said, oh, it might be time to do another video. So I went there to check it out. And I found out that the front end was completely unfunctional anymore. There's no front end. There's no, UI, or there's no dApp for people to use. So I can't click on some buttons and unstake my protocol. I can't claim my rewards, and I can't even send any assets through the Railgun protocol. So I went into the Telegram, and I asked, hey, what's going on with the front end? And the answer I was given was, oh, anyone's allowed to host a front end. And I'm like, well, yeah, of course. That's the same for every smart contract everywhere. You can create a front end for any smart contract on any protocol anywhere. It's the same thing everywhere, right? But every project should have one. But they're like, no, this is not a project. There's no team. This is a decentralized organization. And I still think it's kind of crazy that a community who loves their product doesn't think that they should support a front end. Now, I do get the idea that there might be legal issues because this is a privacy app. So, if they, like, it's Tornado Cash kind of problem, right? Like, Tornado Cash got sanctioned and, you got in trouble if you had used Tornado Cash, your wallet was blacklisted. And then, so maybe they don't want to be, don't want to put themselves in those legal crosshairs. So they don't want to do the front end. They'll let someone else do the front end. But I stake my assets through the front end. And then now I have to figure out how to do it manually with Etherscan or the command line interface. And when I asked about it, it was just kind of like, they were just like, the people in this community were like, you need to level up your skills. If you don't know how to like host your own front end, that's simple stuff. You have to learn how to do that. And I'm kind of like, okay, like I can do it. Like I figured out how to claim my rewards, and I figured out how to start my my unstaking process, which takes 30 days. But I expressed myself in there, and I was met with like belittlement. And that's kind of why I feel like this is a problem. Like, this is a really cool project. This is a really good service, and it's a very well designed idea. Okay, it's fantastic. But the fact that they don't want to like even support like a simple front end as a community, it kind of makes me feel like, I called it a rug. Now, it's not the same as a rug like, the devs pull the liquidity pool, or they steal all the deposits and they sell them. It's not the same as that kind of rug. But when I deposited, there was a front end. And then when I went to claim my rewards, the front end's gone. There's no announcement. And when I ask, I'm told, you need to be better. You need to learn how to do it yourself. And I'm like, okay, but so then I spent a couple hours figuring out how to do it, and I did what I need to do. But there are people who can't do that. They don't have 2 hours to spend doing this. They staked, so that's why I kind of called it a rug. Like, it's not the same. Like, it's not all rugs are equal, and I guess they're kind of a little bit angry about this because I'm sharing it and kind of explaining. But my point is that like, it's a great project. It's a great product. People really want to use this kind of stuff. But I just find it very unbelievable that their community feels that they don't need a website, or that everybody should just be technically able to interact with contracts directly. Now, I will say that the people who I've got screenshots of, these are they're tagged as admins, but they're not official people. So maybe they're just community members who are just kind of helping out, and this is how they helped out with kind of making me feel like I'm not good enough. But then, later on, a person who actually has the Railgun logo came in and said, we will have another website up soon. We will find someone to host it, so don't worry about it. It'll be okay. And I'm like, okay, great, right? That's kind of the answer I wanted, right? The site's down right now, but it'll be up in a little while. That's great. So anyhow, I just want to kind of like think about this, like it's kind of it's kind of a problem. Like, I kind of, maybe my expectations are wrong, because I went in there and I expected a quick answer and an immediate interaction with somebody who knows what's going on to tell me exactly what's going on. And maybe that's a preconceived like notion that I have, or maybe it's bad training, because that's what we usually get when you go to DeFi protocols. When you go to Telegrams and you ask questions, someone usually tells you immediately what's going on, and then you got your answer, and then right? But that's not kind of what I got here. I got admins telling me stuff that I felt was not a good answer. Like, it was kind of like they didn't want to take onus for the fact that there was no front end. And maybe that's true. Maybe it's not their problem, right? So I don't know. I just wanted to share this and kind of give some more thoughts. I did tweet like this you can read through this and kind of figure out what's going on. and so forth. But anyhow, I just thought I would share this. I'm not saying this is a bad protocol, and I'm not saying that your money is not safe if you use this protocol. I just feel that like the way I got interaction was bizarre and kind of a little bit uncomfortable. Okay, moving on. Here we have sudo rmf or no preserve dot root. Obviously a dev. And I'm going to read what he says, okay? So he says, we just deposit 69,420 ETH into the Ethereum Beacon deposit contract. And guess what? Executed straight from my Tornado Cash address. That means every future withdrawal or grant transaction is now beautifully, irrevocably tainted. This is effing awesome precedent for a good use of Tornado Cash. Today is a good day for privacy and security. Long live Tornado Cash. Long live security. Long live privacy. And long live the DAO. Given the validator queue, we only need to wait 70 days now. Lol. Now, it's kind of I think about this, and I did reply to it, and I didn't get an answer yet, so I can't remember where my reply is. But basically, I thought about this, and I'm like, it's kind of like making it too big to fail, like making Tornado Cash too important to sanction again. Remember in the past, it was like kind of like if you had used Tornado Cash, then Pocahontas and SEC, they blacklisted your wallet, and you were a problem person. And now basically the entire Beacon contract has been funded with Tornado Cash. But it does say somewhere down here that actually the Beacon contract itself was deployed from a Tornado Cash wallet. So it was already tainted, I guess. So, but it's interesting. I like, is this a good thing or a bad thing? Now, like, will this kind of discourage like institutions from using staking, ETH staking now? Or are we past that? They don't care about this anymore. Like Tornado Cash is fully cool now, and it's all good, right? So it's a weird one. Like, of course, Trump has no intention of making Tornado Cash like sanctioned anymore. But what if like the next president is like, Pocahontas's best friend? Then will this create a huge problem? I don't know, right? So, anyways, that's that. Moving on, here we have a Bitcoin therapist. This is a nice one here. Okay, so he says, "Hey Grok, tell me how low the price of Bitcoin can go before there is any concerns about the solvency or balance sheet healthy of strategy." Michael Saylor's Bitcoin strategy thing. Give me the lowest possible price Bitcoin can trade before it is of any concern. And then he has a conversation with Grok, and some other person jumps in as well, and it's quite interesting because it's like he's like, give me the exact price, and the exact price that is $19,700 per Bitcoin, but it's not exact. It's like it depends on precise financials, and if people start calling in or selling. And then there's one more question down here: why would someone buy? No. Where is it? Anyhow, so another person somewhere, why would someone buy master stock if they can? Average cost would be higher of Bitcoin. Anyhow, so someone did ask, I can't find it where it went, so maybe it's underneath one of these, or you got to dig through a little bit. But someone did ask, like, well, what if people start selling master, the stock? Will that change? And I think it's a pretty cool like thread about using Grok and talking about Bitcoin and MicroStrategy. But the main takeaway of this is that like, MicroStrategy seems to be pretty safe. Like, is Bitcoin going to go down to below $20,000? I don't know. Some of the news recently might make you think that. In the next tweet, I'll talk a little bit about that. But yeah, so anyhow, you can kind of like check through this, and I kind of like this idea of like having a conversation with Grok in public and kind of having people read it and then ask more questions with Grok. And I like this kind of these kind of tweet threads. Okay. Moving on. So Gum says, he posted this cute little thing, having a drink. And so what happened over the weekend? So Pomeliano is an Iranian informant, threatened Epstein. Okay. Epstein files describe Saylor as a zombie on a drug. Justin Sun's ex snitched on him on Twitter. CZ says super cycle is over because crypto Twitter hates him now. CZ says Binance will buy 1 billion BTC. 2 days later, 1 billion dump on Binance causes a fresh crash. Tolly unfollows CZ, somehow Sol dumps from 117 to 94. Garrett Bullish liquidated over 700 million longs. Okay, so yeah, like basically the weekend was just rammed full of terrible things, right? Like the even like there was a little bit more, like there's like even like Epstein like stuff about he's in like control of the devs of Bitcoin and so forth. So I don't know, like at least I don't really hold Bitcoin. I'm an ETH maxi in the regards to the Bitcoin versus ETH consideration. I just believe in the fundamentals of ETH and I don't believe in the fundamentals of Bitcoin. I'm not saying Bitcoin's a terrible coin or it's going to go to zero, because we all know things are unexplainable and manipulated and controlled and all this kind of stuff, and ETH as well. But at least I know ETH has a lot of use case, okay? A lot of utility, and that makes sense to me, okay? So anyways, so a lot of crazy things happened on the weekend. You know, the Epstein files got leaked or dumped. I don't know what the deal is. I don't know if it's a hack and leak, or if the government just finally said, here you go, you guys want this stuff, take it. And lots of names, lots of people, and it's been hard to kind of ignore it all. Anyhow, let's move on. Okay, my good friend Simon Didick, he's got something here. So if you're wondering how to pull off a strong but unsustainable pump and dump to extract maximum value from retail, just like River did, it's easy. Okay, so here he's kind of talking a little bit more about like just the pump and dump systems that just keep happening. It just happens over and over and over and over again. So here, let's read through what he says. Partner with BitGet by paying them a security deposit plus a chunk of your token supply. So we get your token on BitGet by paying them and giving them some tokens, right? This way they won't just get a listing, you'll get a partnership to maximize your TGE and post-TGE performance, including but not limited to artificial demand creation. So get some wash trading, so lots of, volume on your coin. Liquidity and sell pressure management via aligned market makers that print fake charts. So they'll pump it so that the retail FOMO's in, and then they dump on the retail, right? Coordinated media and KOL campaigns. So get some fuel the fake FOMO even more. And follow in the footsteps of top tier projects such as Monad, Falcon Finance, only possible on the sexes. So yeah, so these sexes have these black boxes. They have all these services. They're looking for ways to support, as they say, projects. But we've seen it again and again and again and again. Every time a project lists on one of these centralized exchanges, there's a pump and dump. Because in order to list on a centralized exchange, what do you have to do? You have to pay them. And then they will charge their users fees as well. And who's going to make money? You think the users are going to make money? Probably not. They're going to fleece massive amount of people. People are going to FOMO because they want to get in early and get on this chart. But there's definitely buyers at the top, and those peoples are wrecked, right? So anyhow, you do you. If you like these ICO things, these TGEs, especially on a centralized exchange, go for it. But I will never suggest anybody to do that kind of stuff. Okay, and then he's got a bunch of screenshots of him showing, that he had a conversation with what are the listing requirements to get on BitGet. So yeah, you can read through his conversation as well. So here's an interesting one. I got maybe two more tweets for you. So this one is Frank Chaparral, FinFech Frank. He's like, let's take a look at the Wall Street Journal. So Wall Street Journal's headline, front page: the crypto CEO who's becoming enemy number one of Wall Street. Brian Armstrong dubbed enemy number one of Wall Street in the weekend's Wall Street Journal. So yeah, there is a lot of talk and a lot of, conversations happening between Wall Street, the banks, versus the government, and the government allowing crypto to continue. So I think it's pretty bad because, like, one, the government is supposed to protect the people from, scams and harm, so to speak, right? That's kind of the point of the government. However, they also shouldn't, like, the crypto system is better than the banking system. Of course there are risks and fears, but like, if you lend money in crypto, you get 2 to 5%, maybe even 12, 13% if it's just dollars, right? But if you put it in the bank, you get less than 1% because they have this huge system of waste, right? Where all that money needs to pay for all these things, all these physical buildings, all of these people who have high salaries and people who have low salaries, and lots and lots of employees and people getting rich by owning stocks of these banks and so forth. So there's and then insider trading, and even like the stock market having that like pre-trading window for institutions where they can buy and sell before the retail can, and all this kind of stuff, right? There's so many problems with the traditional banking system, but they have power over the government, so they're like lobbying the government to try to keep crypto under their boot, right? So we'll see what happens. I don't know. I'm a little bit scared, but anyhow, you can check out that Brian Armstrong is enemy number one if you get the Wall Street Journal. Last one. Okay, the last one here, we have an article by ETH Strategy. Again, I'm biased on this guy. I have holdings inside ETH Strategy, so I'm following them closely to kind of figure out what's going on. Here they talk about how to do gamma scalping. Now, you can read through this. I read through this entire thing once. I'll probably have to... Excuse me. I'll probably have to read it again to really understand what this is. But basically, it's like delta neutral scalping, making money by delta neutral. Now, read through it and you'll get a better understanding of what it is. But, it's like, so you've just bonded $100 with ETH. Now what? You have a call option. Suppose ETH today is $2,000. Your option lets you buy ETH at $2,500 at any time in the next 4.2 years. So that's the new system. The new thing that they're dropping is you can bond and you can buy ETH in the next 4.2 years. So scenario A, do nothing. ETH goes to 3,000. You buy ETH at 2,400 and sell it, and you make $600, right? ETH stays flat and goes down. Nothing happens. You get your $100 back after 4.2 years. So this is like the easy mode. You bond, you get an option, and you can get your $100 back, or you can buy ETH if it goes up. So it's kind of like a win-win, right? So that's the simple process. And then it's like, oh, but option B, while you're waiting, you can scalp your options. So and it kind of gets into what is delta, what is gamma, how do you become neutral, how do you make money off the volatility? Because as the price of ETH is moving around, then your delta is moving around, your gamma is moving around, up and down. And it can kind of, you read through this. I'm not going to explain to you how to gamma scalp because I'm definitely not the person to explain it. But you're trading as long as there are people who are willing to buy and sell. And ETH is a fantastic one because there's so much on-chain liquidity, and the liquidity is there, and there's quite a bit of volatility as well. Then you can kind of scalp and you can make money by buying and selling ETH and creating a neutral position, or slightly unneutral, but you're aiming for neutrality, but you have some protection in your call option and stuff. So anyways, you can check out this article. I think it's a good read. I will kind of look a little bit deeper at this myself and try to educate myself better on this. Okay, so that's it for today. I hope this has been interesting and useful, and I hope it's great for you. And thank you for listening, and goodbye.